Welcome back to the channel, the Daily Forex. In today's video, I'm going to share with you guys a strategy that you can use to catch spikes and also scalp the market and make profits. With this type of strategy, you'll be able to use to grow your small account and also make profits on the market. Okay, so guys, please don't mind the noise in the background. All right, so first and foremost, I'm going to get over to the indicator section. You know that when I trade boom and crash indices, I normally use few indicators together with price action strategy to be able to see the next price movement on the market, right? So I want you guys to pay a very close attention to everything that I'm about to share with you guys in this video. All right, so let's get on with it. Okay, now the first indicator we're going to use right here on indicator on the main window is going to be the Bollinger Band. Okay, the Bollinger Band is the indicator. So we'll go over to the indicator section right here and we'll look for the Bollinger Band at this very point. For the Bollinger Bands, we'll put a period to period 20 at this very point. All right, period 20, then the shift is going to be 0. Deviation, we're going to put that to 2.000. All right, 2.000. Then you apply to close. All right, you leave the levels just as it is, and you set that on all time frames. Okay, then the style is going to be on color blue. At this very point, you put the style on color blue right here, and you put the pixels to 3 pixels at the very point. All right, with the first trend line pattern, then you click on done. All right, so this is how the Bollinger Band is going to look like on the main window. Okay, on the main window, this is how the Bollinger Band is going to look like. Now the indicator, the second one we're going to use, is going to be the RSI. Okay, the relative strength index. We're going to put that on indicator window 1. All right, we'll look for the RSI, which is the relative strength index right here. We'll put the period to 1. Put the period to 1, you apply to close. Okay, then the levels, this very point, you put here the first level is going to be on 15, the second level is going to be on 85. All right, 85. I'm going to explain the reason for these levels in this video. Then the style color is going to be on black, color black with this middle trend line, right? Then for the pixel, we're going to leave that on 3 pixels just as it is right here, as you can see at the very point. Then you click on done. Okay, then it will take you back to the style on the main page of the RSI. You put that color on white, which is the color of your screen. Then the pixel is going to be this first one, which is 1 pixel. Okay, 1 pixel. Then the trend line is going to be the first one, which is this first trend line at this very point. Then you click on done. All right, so as you can see right here, this is your RSI, and this is the level of 85, this is the level of 15. Okay, those two level. All right, so the third indicator which we are going to be using on indicator window 1 is going to be the Ichimoku Kinko Hyo. Right, I hope I pronounced that correctly. Now we're going to look for the Ichimoku Kinko Hyo, and we're going to put that here. The Tenkan Sin is going to be on 5, while the Kinju is going to be on 2, and the Senku Span right here, the Senkun is going to be on 21. Right, we put that on 21 at this very point. Then the fill, we're going to remove it from tick. Okay, we're going to remove it right here. It's currently on tick, right? So we're going to click that off, so we're going to turn it off. Okay, then you leave that on all time frame at that very point. Then the Tenkan Sin, right, the Tenkan Sin, the color is going to be on white with this first trend line, and also it's going to be on 1 pixel. Okay, 1 pixel. Then the Kinju Sin is going to be on color white, which is the color of your screen, on 1 pixel as well. Then the Shinkun, I hope I pronounce this clearly, the Shinkun, right, the Shinkun, yeah, it's going to be on color white, color white with 1 pixel as well. Then the up Kumo, right, the up Kumo right here, we're going to put that on 3 pixels right here. Put that on 3 pixels at the very point. Then we're going to leave that on the first trend line with the color. We're going to leave it at color green, right? We're going to put that on color green right here. Then for the down Kumo, we're going to put that on 3 pixels as well with color red. Okay, with this first trend line. All right, then we're going to click on done, as you can see at this very point. Okay, as you can see All right, so now basically this is how the strategy is at the moment. Now we can add another indicator, but I don't want to put too much indicator on the chart so that you don't get confused, right? Because this strategy is not that difficult to understand, so I don't want to fill the chart with much indicator. If not, I would have said, all right, let me add the MACD into the chart, and the moving average as well. But basically you can also use this strategy with just the Bollinger Bands, the relative strength index, and the Ichimoku Kinko Hyo, right? So you can use just those indicators, this indicator right here on this chart at this very point. All right, now how do you use this strategy to catch spike and also make profit from the market, which is scalping the market, taking advantage of small price movement on this market? So basically what we're going to do right here, we're going to be using the third zoom level. Okay, the third zoom level. Now this is the first zoom level, one. All right, first zoom, 1, 2, 3. All right, third zoom. You can even use the second zoom level, right? You can use the second zoom level. So I'm going to zoom out and use the second zoom level at this very point. All right, so what we're seeing right here at this very point is that there's a two level here. There's a level of level of 85 and there's a level of 15. All right, now for you to get this more accurate, we can also change this level and put that on level 90 and level 10, so that you can know that when this gets to that very point is the most accuracy. But let's just leave it at this very point right here. Now if you take a look at this moment here, if you take a look at this point right here, when price gets to this point here, you can see at this very point, which is the level of 15, when price crossed below this point, you can see that there was a spike at this very point. So basically this is clearly telling us that when this Ichimoku right here, this Ichimoku Kinko Hyo crosses below the level of 15 of the relative strength index, the market is going to spike. You can see that this was the point whereby it touched the level of 15 and it was 1, 2 candlesticks right here, 1, 2 candlesticks, 1, 2, and there was a spike. Another spike came through again, and you can see how the spike went through. So basically when this gets to this level of 80, it has gotten to the oversold position, right? So basically when price has gotten to that very point, which is the Ichimoku Kinko Hyo have gotten to the level of 15 of the relative strength index, the price is going to reverse backwards to start going towards the upward trend, to start buying, which is the bullish, start following the bullish pattern, right? So price started to retrace upwards at this very moment. That's why you saw that this red line changed to green, right? The red line right here changed to green. Remember that we are on the boom 500 index, right? Boom 500 index right here. So and what we can do right now is we'll go over to the relative strength index right here, and we're going to put on here, we're going to put level of 15. Let's put on buy at this very point, and let's add sell at this very point here. All right, we'll click on done. Okay, so basically what we're going to observe is that it's going to remind you for a buy when price crosses below, so you know that you are going to buy the market. So you place your buy and you catch the spike. Now you might be wondering that there was a spike right here at this very moment, right? There was a spike right here, but if you take a look at this point, the spike that came through is almost about 5 candlesticks, right? So it's very little spike, so it doesn't really matter if that spike, which is this one right here, came through. Okay, so what we're basically looking for is that huge spike on the market, because basically we're buying the market, right? So what you do is that you only place your buy when price have crossed below this point, then you place your buy to cash the spike. If we go back to the historical trend right here at this very moment, take a look at this point here, there was a spike. All right, there was a spike. You can see how massive that spike is. Okay, you can see how massive that spike is at the very point, right? Very massive spike. So and once you want to take advantage of small price movement from this market, if you want to take like 5 candlesticks up to 10 candlesticks, you wait when price gets to the overbought here. When price gets to the overbought and you saw that the green line have changed, started showing red during the level of 85, you go into the market for a sell and you take just 5 candlesticks and you're out of that market. Okay, just 5 candlesticks and you're out of the market. Do not exceed more than 5 to 10. Okay, so that the spike that is going to come to the market do not end up taking away your profits and end up, you know, in a losing trade, so that you don't end up in a losing trade. So just take more than 5, then you wait for another opportunity. Trading requires patience, and patience is the key. All right, patience is the key. You know, like, you know, people normally say the patient dog, you know, gets the fattest bone, right? People normally say that, and that's what they say, right? The patient dog have the fattest bone. So what you need to do right here is to have that, you know, mentality. Be patient. So I'm gonna call it that the patient trader have more winning trade. The patient trader always have a winning trade. You know why? Because when the trader is patient and wait for that perfect opportunity to enter into the market, it's going to be, you know, more accurate and profitable at that very point, because you know that yes, this is that perfect opportunity and perfect entry for me to go into the market and, you know, get what I need, and I'm going to be out of that market, right? So you have to be patient at that very point. All right, so I believe you understand what I've said to you guys. All right, now that you understand everything that I've said on boom market, let's go over to the crash market so that I can show you guys how you can use this same strategy on the crash market. Okay, so we'll go over to crash 500 index. Crash 500 index using the same parameters and setup as you can see, right? We're using this on the second zoom level. Okay, the second zoom level, 1 2 3. All right, third zoom, right? Third zoom. All right, we're using this on third zoom. Okay, third zoom level. Okay, you can use it on the first, second and third zoom. Okay, all right, so now that we're on the third zoom level at this very moment, for the crash market, basically what you're going to do right here is that you're going to observe the market clearly. Remember to always check the higher time frame before you confirm your entries. Go over to the higher time frame, just like the 30-minute time frame, the 1 hour time frame, to confirm your entries. All right, as you can see. Okay, but basically this strategy works on the lower time frame, which is the 1 minute time frame. So we're using the 1 minute time frame to scalp the markets and, you know, to catch the spike, taking advantage of small price movement on the 1 minute time frame as well. Right, so we'll go back to the 1 minute time frame at this very point. Then on the 1 minute time frame, what we're going to see right here is that if you take a look at this point here, when price crosses above the level of 85, the market spiked at this very point, and it wasn't just there alone. After the spike came through, the next one again was a spike, and there was a spike, another spike here, and there was another spike here again. So you can see how long that spike is. So you can see the accuracy. You can see the accuracy, right? Very accurate. Take a look here. Take a look when price gets to this point. Although sometimes, you know, these indicators might, you know, lag, right? They might take a little bit of time, but it doesn't mean even if it take a little bit of time, maybe about 5 or 10 candlesticks, you already know how to, you know, minimize your risk. You already know how to calculate your entries, right? Remember that when you're catching your spikes, when you're placing that, you know, sell entry, you know that your account is going to be in a minus for a certain period of time. You should know how many candles and how many, you know, entries you should know how many candles you want to, you know, risk on the market. All right, you should know how many candles you want to risk to catch a spike. So these are calculations you should do before you start, you know, placing those entries to catch the spike. All right, so when price gets to this point here, you saw that there was a spike at this very moment, and you wait again for another opportunity. When price crosses below this point here, then you place a buy, scalp the market, take just 5 candlesticks, and you are out. Do not exit more than 5. Okay, so we're gonna end here. So I believe after watching this video, you understand everything that I've said on boom and crash, on how to catch spikes, and also scalp the markets, taking advantage of small price movement. And also, guys, join our Telegram community, the Daily Forex on Telegram. You know, on our Telegram community, I share with you guys, you know, tips and strategy, and also give you guys free signals on how to trade, you know, the market. All right, I give you guys free signals. I share with you guys tips and strategies on how to trade on my Telegram community. Okay, the link is going to be on the description box below. The Daily Forex on Telegram. All right, and I'll see you guys on the next video. And if you found value, do it to like and subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.